So tomorrow is the Federal Reserve's Jackson Hole Summit, where they're going to talk about interest rates, inflation, obviously tapering, potentially not buying as many bonds, and the market wants answers. But it's looking more and more likely that the market isn't going to get any answers, especially not definitive ones. That's what we're going to talk about in this video, so stick around. Hey guys, welcome back to the TipRanks YouTube channel. Thank you so much for joining me for another video. I'm Richard Allen. We're going to talk about the Federal Reserve's Summit in Jackson Hole tomorrow, and it's looking increasingly likely that we're not going to get any sort of definitive answers on tapering. And if you don't know what tapering is, essentially the Fed is talking about and considering, because of the economic growth that's going on right now, purchasing less bonds. So real quick, let's just jump over to TipRanks.com. Let's take a peek at the S&P 500, the Dow, the NASDAQ, and see how they did today. They were all essentially down 0.5%. All of them, 0.58, 0.54, and 0.59 respectively. So looking at those numbers that we just talked about with the major indices all down about 0.5%, you can see that the market doesn't really like uncertainty, and especially on the institutional and the hedge fund side, they don't like any sort of uncertainty, and it's looking like we're going to get uncertain answers. Now, I talked about tapering a little bit. Now, the Fed has been purchasing $120 billion worth of bonds every month to help alleviate the pain and kind of curb inflation and interest rates on bonds because of the pandemic. There's so much going on with the pandemic, and some of the presidents of the different Federal Reserve banks around the country are thinking, look, it's time to taper. So here's a statement from Esther George, president of Kansas City Fed. She said, given the progress we've seen, when you look at the jobs gains we saw last month, the month before, you look at the level of inflation right now, I think it would suggest that the level of accommodation we're providing right now is probably not needed at this scenario. So I would be ready to talk about taper sooner rather than later. We have another statement from James Bullard, the St. Louis Fed president, saying, I think we want to get going on taper. Get the taper finished by the end of the first quarter next year, and then we can evaluate what the situation is, and we'll be able to see at that point whether inflation has moderated, and if that's the case, we'll be in great shape. If it isn't moderated, we're going to have to be more aggressive to contain inflation. Again, we're unlikely to get any sort of real news tomorrow. Most of the market, the institutional investors, the hedge funds, sort of know what's going on, and you're probably going to read a lot of headlines tomorrow based on, uncertainty in the market, fear in the market, things like that, and we're likely to see a little bit more pain tomorrow. That's what I would guess. Guys, let me know if this was helpful and gave you a little bit more understanding of what's going on, because honestly, I don't want you to read some headlines and get kind of scared in the market, but I would expect a little more pain tomorrow in the market. Again, we're at all-time highs in the stock market. So for most of the major indices, we're at or near all-time highs. We had a 5-day winning streak after a really rough week last week, and that's been good for the markets. We hit all-time highs again. So I hope this helped. If it did, hit that like button for me, and I'll see you in the next one.